we have really nice reaction off of the new week opening gap. We've explored price up here prior to the session starting. It's Friday, okay? So what can we do? We can look at the weekly range because we have moved one-sided. We've moved so far one-sided that it's reasonable to see Friday have a retracement back into the range that was formed from Sunday's opening all throughout the week of trading. How much of a retracement can we pull back in? We can trade back into that range 20 to 30%. It does not mean that that's trying to predict the closing price on Friday. I'm not trying to do that. I have stuff that does that, but I'm not trying to do that for the sake of the TGIF scenario. Thank God it's Friday is simply a way for me to kind of like press on the students to think, okay, thank God it's Friday. It's a big week directionally one-sided, and we've had that this week. We've had the market just go straight on up, and we had a lot of movement to the upside, which means that the market is more inclined to trade back in that range to a degree of as much as 30%. There are rules that can see as much as a 40% retracement, but I have not found a way to teach it in a manner that wouldn't be complicated. So as I've mentioned it to private mentorship students, there are things that I have that I can't teach everything, obviously. I mean, it's enough to know that 20 to 30% is an easy ballpark figure. And you can trust sometimes taking shorts on a Friday that could trade as low as 30% of whatever the highest high and the lowest low for the week is. 30% minus the high of the week. That's where you can anticipate the market potentially trading to. And sometimes it's a straight shot. Like it'll jump right there and go real nice. And then once it gets there, then it peters out and goes sideways and then maybe bounce up a little bit, but then it's nothing else for the rest of Friday. The market just dies out. Other times it just meanders around a little while, breaks down, meanders for a little while, and then breaks down. And I think that's possibly what we'll see today because there's nothing to speak of on the economic calendar except for it's the end of the week and nobody wants to hold risk over the weekend. And they can do a nice reset by having the market come off of the highs 30%, and it wouldn't unravel anything. Even if it's long-term bullish still, because it's an election year, these things can be still supportive, even though nobody that wants to be long or is long wants to see 30% of the weekly range give up. Like they don't like to see that profit be reduced or open profit without having taken any from it.